buying into this rally. Are you a believer?
Today, maybe not. I think you have to look at this over a little bit longer of a time frame. I'm not going to say look at this over years, but look at what happened in September. We had almost a 10% down month in September. This is a nice little relief bounce, and I think, frankly, that's all it is. We're looking at possibility of the Fed becoming more dovish. I think that would be a mistake on the part of the Fed at this point, with CPI still at 8.3. So I don't think that that's a realistic turn. But I do think that some of the data is slowly worsening, which, frankly, is a good thing. But I do think that yesterday and today are probably a little bit of an overbuying bounce.
Josh, same question.
Well, you want to respect price. And actually, if we were to close right where we are right now, we would be up 5.4% over 2 days. And that would be the best two-day return. You have to go back to April of 2020 coming out of the pandemic. So there is no question the bounce is powerful, and almost everything is participating. 98% of stocks are up. You've got all 11 sectors in the S&P higher. So fine, let that run its course. But if we're saying, like, the reason is bond yields have come down, okay, I understand that. If we're saying, if we want to take it further and say this will continue because the Fed is on the verge of pivoting, stop for a second and let's think through the implications of that. If they are on the verge of pivoting, it obviously isn't because of anything going on in the stock market. So it must be something going on in the real economy. And that's not necessarily a great thing. So I agree with Liz. Look, this is a lot of fun. I was on the show 2 weeks ago saying I think there's going to be a big bounce. I was early. I was wrong, blah, blah, blah. I bought stuff anyway. It's green. I'm not, like, trying to pour, cold water on everything. I'm just saying these things happen in bear markets, and the bigger, more vicious the bounce, the more obvious it is that it is part of a bear market bounce. So guilty until proven innocent.
All right, Steph, wish you were here, but also want to know where you're at when it comes to this bounce.
Yeah, and I agree with Liz and Josh on a lot of the points. We were oversold after the worst September since 2002. And then there is this belief about the pivot. And I agree with Josh about got to be careful of what you wish for on a pivot. But I think that we're thinking it's a pivot, or they could pivot, because after the UK actually changed their tax policies, they reversed. The RBA raised rates less than expected. And then yesterday, we had the ISM manufacturing number, the inflation data in there, was the best since June of 2020. And so people are thinking that inflation is coming down, it's peaked, it's coming down, it's going to go right back to trend. And I just don't see that. You have core PCE of 4.9% year over year. You have wages and salaries up 8.6% year over year. You have rents still north of 5%, right? And oh, by the way, commodities have actually reversed, right? They're not shooting higher, but they're not going down that much anymore. So I think, and the biggest takeaway that I have is we just don't know what all of these rate increases is going to mean to the economy, because it takes such a long time to filter into the economy, like 6 to 9 months or so. So we're going to be slowing massively. I think there's a very good chance of a recession. I do think, though, that expectations got really overdone on the downside. And so perhaps short term, yeah, maybe this pop can last, especially if earnings are less bad than expected. At least I like the risk reward headed into earnings. And we get the big doozies next Friday with the big banks.